Indian automobile market has been widely seen as one of the biggest in the world, mainly due to its size, even though it suffered some setbacks due to volatile oil prices and production costs recently. Analysts believe market still has potential to grow because of the domestic demand. A report.
At first look, the Indian automobile sector seems less than exciting. Sales are growing at single digits, capacity utilization is at 50% at best, and there's little international demand. But the dismal numbers actually mask market's potential, especially at a time when domestic factors are favoring the market.
The first thing which we saw was a series of rate cuts. That kind of reduces the cost of ownership. We see the trend in the decline in fuel prices. Overall, the other aspect also which has come to rescue is the growth in the manufacturing segment.
IHS predicts India will become the third largest sales market for automotives before the end of the decade. Analysts cite growing wealth in India.
I expect that growth will start picking up in the second half of the year, starting with the festival season. If there's a good monsoon and economic growth recovers, that should help consumer sentiment, and starting with the festival season, we should probably get back into double-digit growth and a more robust recovery actually happening in FY17.
Market players believe it. According to PwC, local and foreign car makers have pledged almost $10 billion in investments in coming years.
I think exports are picking up well. They've had sort of better growth over the last couple of years, and obviously that's been helped by the currency depreciation. And I expect that OEMs will continue to invest in growing their export production out of India.
Money couldn't come at a better time. India has set out a new safety guidelines for automakers that will raise production cost. But whatever they will pay in terms of production, they may gain in terms of reputation. Nidhi Rai, South Asian Newsline, Mumbai.